evening, September 30th, the last day of the month, the last day of the quarter. Let's take a quick look at some charts and see what the market may be telling us. On the screen is a minute chart of the S&P 500. I wanted to show you today's move. It started out over here and it gapped open, came up, reached its peak within the first 40 minutes, and then tailed off into lunch, recovered a little bit, and then went flat for the remainder of the day. And the same kind of look happens on the Dow, whether you look at it. The NASDAQ has the same kind of look. It was just a strong open. It looked like the market was really going to go someplace again today, but it just never really got its footing and could carry through with that move to the upside. The same kind of look here on the S&P, or excuse me, on the NASDAQ. Big opening gap up, was all over quickly, came down, kind of went sideways and then down, did recover some, but basically flat for the rest of the day. So let me show you something here. I know I've mentioned Fibonacci retracements. I'm not a real big Fibonacci person, but I am mindful of one level, the 61.8% retracement level. And I have noted several times when a move tries to recapture its old highs or its old lows that it will sometimes die out at that 61.8% level. And here is that level right here today, and it looks like the composite just tagged it at about 3 o'clock and then came in for the rest of the day. We can switch back here and see how it looks on the S&P 500, and I'll just draw retracement in. I won't get the very high, but I'm just looking for a cluster of highs, and I'll draw it down here to this little cluster of lows, not this outlier. And the S&P 500 came nowhere near the 61.8% retracement. That's that level right here. Here's the 50% line. It couldn't even do that good. So I think the market today, it sure looks like it's skating on a little thin ice, but this market has continued to grind higher all month long. So we just have to take it a day at a time and see what happens. But the more I look at the internals, they look weak. There's lots of optimism out there, and that is not a bullish sign. Let's switch over here and look at some range lines on the daily chart. On the screen is the daily chart of the NASDAQ composite. You can see the 2377 line has held price fairly well. The trend line up from late August, early September. We've been back and forth across that several times. Really not much forward progress all week long. We did have kind of this outlier that jumped quite a ways above that range resistance line today, but came right back in. Down here in the lower pane is my little energy indicator, and if you can just isolate your attention right here, you can see where it corresponds to this move up. It's fairly smooth right here. It kind of peaked out a little bit, came in, and then came up again with price as price continued to make higher highs. Today we had the highest high of the month that was made, but look at this indicator. After it had rolled over, this did not make a higher high confirming price. So we have a divergence here. And the same look is with the S&P 500. It stayed up here in what is normally thought as an overbought area, came down, made that little fish hook and circled and came north of the 50 line again. Up here we see that the highest high of the month was made, but not on this indicator. So there is another red flag that maybe the market's going to come in just a little bit. I think where we may take our clues for when top, whether it be a short term or intermediate, may be in with the averages, will be this index right here, the dollar. The dollar has just gotten hammered. It's sitting right here on range support. It's 78.66, closed today at 78.78, and just no energy here in this energy indicator. Something else that I've seen that I don't think will continue, I'll get over here to a performance chart, and show you that the white line here is gold. This red line that is moving up here, kind of intertwined with the orange line. The red line is long-term bonds. The orange line is oil, and the blue line is the S&P. Essentially, these are all moving up. Gold, bonds, and equities are all moving up. That's not normal. Those assets are usually non-correlated, so something is going to give. Where it's going to be, I don't know. Is it going to be in gold, bonds, or the equities? But I will guarantee you it'll be in one of those three areas. We'll just have to wait and see where. So I thank you for stopping by. I hope that you got a little insight tonight from this video. I sure enjoyed doing these, and I thank you for watching.